The world believed silver was a quiet metal, a relic of coins and jewelry markets overshadowed by gold's grandeur, eclipsed by the roar of oil and the bleep of Bitcoin. But in the twilight months of 2025, something impossible was happening. Markets that once whispered of silver now screamed it. Charts were breaking records. Prices weren't just rising, they were rewriting the history books. Spot silver was trading near $67 per ounce, a level thought unimaginable just months before. The question that loomed over traders, analysts, and everyday citizens was as enigmatic as it was urgent. Why is silver going up? What hidden forces had broken decades of inertia and turned an overlooked commodity into one of the year's most explosive asset classes? It began with a paradox. A commodity tethered to both the old world of safe haven investing and the new world of cutting-edge technology. In most financial narratives, you could trace price movements to simple causes: demand, supply, fear, optimism. But silver's rise had no single explanation. Instead, it coalesced from multiple intertwining forces: macroeconomic forces, supply chain puzzles, geopolitical currents, rising industrial demand, investor psychology, and structural market dynamics few ever anticipated. To understand this journey, we must start with the price itself, not as a number, but as a signal. In December 2025, silver reached levels beyond $65 per ounce, marking over a 120% gain year to date, outpacing even gold's own surge. This wasn't a blip, it was a conviction, a fundamental shift. And yet, it happened in a metal that many assumed was stagnant, a world where analysts once predicted little more than inflation hedging and safe haven demand. So what changed? The story of silver's ascent begins with a structural imbalance buried deep in the Industrial Revolution of the 21st century, one the world barely noticed until it was too late. Silver has always had two identities. It is at once a precious metal, sought for its historical monetary role and aesthetic beauty, and an industrial metal, indispensable in modern technologies for its unmatched electrical conductivity and reflectivity. It is the metal of mirrors, circuits, connectors, high-precision instruments, and photovoltaic cells. Unlike gold, which is nearly 90% demand for investment in jewelry, industrial demand now makes up more than half of global silver consumption. By 2024, industrial usage had already reached record levels, more than 680 million ounces, driven by technologies that were once peripheral but had now become central to global development: renewable energy, electric vehicles, electronics, and AI-powered data centers. International Precious Metals Institute. But something crucial was happening beneath the numbers. The supply side could not keep up. For decades, silver production had stagnated. Mining output struggled to grow due to declining ore grades, lack of investment in exploration, and regulatory hurdles that slowed new projects. Not only did mining struggle to match rising demand, but about 70% of silver came as a byproduct of other metals like copper, lead, and zinc, meaning silver supply could not easily expand even with rising prices. This global structural supply deficit had been quietly building for years, 7 straight years of demand outpacing supply. Yet few outside specialist circles paid attention. Then, suddenly, the deficit became a price driver. Across the world, industrial demand for silver did not just grow, it exploded. Solar panel manufacturers, electric vehicle producers, semiconductor fabricators, and AI-driven data infrastructure companies began consuming silver at rates never seen before. Solar alone accounted for a multi-hundred million ounce slice of that demand. Electric vehicles, which rely on silver for electrical contacts and circuitry, began absorbing ever larger quantities. And next-generation battery technologies hinted at even greater future consumption. Across Asia, data centers and 5G infrastructure projects surged, all of which depended on silver for crucial conductive components. China's leadership in renewable installations further amplified this surge. Global demand was no longer a projection. It was reality. And silver's inelastic supply structure, in which producers could not quickly ramp up production, meant that any supply shortage would directly and immediately pressure prices upward. Compounding this, physical inventories in key market hubs dwindled. London and COMEX vault holdings shrank significantly. Analysts reported that London inventories fell dramatically, tightening physical availability and forcing premiums to emerge in futures markets, a condition known as backwardation, and where immediate delivery became more valuable than future contracts, signaling structural scarcity. This wasn't normal volatility, it was recognition that silver's floating stock, the metal immediately available for delivery, was tightening fast. At the same time that industrial demand was rising, macroeconomic dynamics were driving billions of dollars into precious metals. Across global financial markets in 2025, expectations began building that central banks, most notably the U.S. Federal Reserve, were preparing to cut interest rates. Lower rates tend to reduce real yields on financial assets, making non-yielding assets like gold and silver more attractive as stores of value. Silver, in particular, often gains disproportionately because of its smaller market size. Under these conditions, the US dollar weakened, and because metals are priced in dollars, a weaker dollar made silver relatively cheaper for foreign buyers, increasing demand further. Add to this backdrop a world rife with geopolitical uncertainty, trade tensions, supply chain shocks, and global political frictions, and you had investors seeking safe haven assets in a way not seen since the financial crises of previous decades. Precious metals became not just a hedge against inflation, but a bet on systemic instability. For silver, which straddles both the industrial and monetary realms, this dual demand translated into massive investment flows. Exchange-traded funds, ETFs, backed by physical silver, saw record net inflows. Holdings skyrocketed to record levels, reflecting institutional and retail investors alike, reallocating capital toward metals as traditional markets wavered. This conflation of industrial necessity and financial hedging created a dynamic rarely seen. A metal that was both a strategic industrial input and a market hedge being bought by every class of investor. One of the most dramatic shifts in 2025 was technical and psychological. The gold to silver ratio began narrowing sharply. Historically, this ratio, the number of ounces of silver needed to buy 1 ounce of gold, had hovered much higher, a sign that silver had underperformed relative to gold. As silver began to outperform, the ratio compressed. This shift triggered ratio-based trades, a flood of capital seeking to exploit what many saw as silver's undervaluation relative to gold. Meanwhile, market positioning, particularly short positions in futures markets, created an environment ripe for potential squeezes. Traders betting against silver found themselves increasingly exposed as prices rose and physical supply tightened, leading to forced buying and cover trades that further amplified upward moves. This confluence, shrinking inventories, rising industrial demand, macro hedging flows, and positioning squeezes, produced a feedback loop. Every price rise fueled more demand, which tightened supply, which in turn supported further price increases. Some analysts began warning of a blow-off phase akin to those seen in historical bubbles. Rapid, momentum-driven price spirals fueled more by sentiment than by fundamentals. Others countered that silver's deep structural deficits and growing industrial base were underpinning a sustained fundamental bull market. This tension between hype and fundamentals became a defining theme of 2025. But beyond the market mechanics, deeper structural shifts were underway. In 2025, the United States added silver to its critical minerals list, a legal designation signaling strategic importance for national security and industrial resilience. This move wasn't merely symbolic. It triggered policy shifts toward domestic sourcing, incentives for production, and stockpiling considerations that could tighten markets further. Across Latin America, regulatory changes and labor disruptions in key producer countries like Mexico and Peru, two of the largest silver-producing nations, constrained supply, amplifying the global deficit. China, meanwhile, continued aggressive investment in renewable energy and electronics infrastructure, both massive consumers of silver, even as proposed mining royalty hikes threatened to dissuade foreign capital from expanding silver production. These geopolitical and policy moves, often invisible to the average investor, were reshaping the global silver landscape in real time, highlighting how national strategic imperatives and international competition can influence commodity markets deeply. Every claim about this rally is anchored in measurable reality. Silver has soared past $67 per ounce, registering one of the strongest annual bullion rallies since the early 1980s. Industrial demand surpassed historical records, feeding into a supply deficit that outpaced production year after year. International precious metals. Institute Exchange traded products, backed by physical silver, saw record inflows, pushing holdings to historic highs. Inventories in London and COMEX vaults shrank, tightening immediate availability and signaling deeper structural tightness. The gold to silver ratio narrowed dramatically as silver outperformed traditional precious metals benchmarks. Macro indicators, central bank policy, dollar weakness, inflation concerns, aligned to favor precious metals. These data points paint a picture not of random fluctuation, but of a system-wide transformation. One of the most fascinating insights of this story is the pattern recognition emerging among institutional players. Strategic investors, sovereign wealth funds, central banks, industrial consumers began treating silver not as a commodity, but as a strategic asset. Banks, once indifferent to silver, now upgraded their forecasts, with some predicting even higher price targets based on structural deficits and industrial growth. Meanwhile, mining companies and metal producers pivoted their strategies. Silver was no longer a byproduct revenue line. It became a core priority for capital allocation, exploration, and technological innovation. The narrative had reversed. A metal once defined by its secondary status was now front and center in investment theses, supply chain strategies, and national security policies. This was not accidental. It was the result of systemic behavior, where industrial demand, scarcity, investor psychology, financial institutions, and sovereign decisions converged in a way history had not seen since the post-war commodity cycles of the 20th century. Today, as we stand at this inflection point in late 2025, silver's story is far from over. Its rise has been steep, its momentum undeniable, yet the forces behind it are not ephemeral. They are structural. They are global. They are shaped by technology, industry, policy, and psychology. Silver is not merely going up because markets are volatile. It's going up because the world itself is transforming. Digitally, energetically, economically. A metal once relegated to angles of jewelry cases now sits at the crossroads of renewable energy, electrification, advanced computing, and strategic reserves. It has become both the metal that powers the future and a hedge against uncertainty in the present. In that sense, the rise of silver is not just a price story. It is a narrative about systemic change, about how modern economies value resources when innovation, scarcity, and strategic intent collide. As we look forward, the question is no longer if silver will continue to matter. The question is how its ascent will reshape markets, power structures, and global economic narratives for decades to come. Because this moment is more than a rally. It is a pivot in history. Stay ahead of the market. Subscribe now for the latest insights and expert analysis on silver and other precious metals.